Hi everyone, welcome to WIC channel. My name is Rifad. So you guys can see, got a nice haircut. Gotta look good for you guys, right? Like today this video pretty much is gonna be kind of a continuation of like last week's video. I kind of went to you guys, told you guys about the key ratios, which is important to see, and I kind of making this video to kind of apply those what I kind of showed you guys, apply those in the concept as how I evaluate a company, how do I see the company, all those kind of stuff. Like I just want to put that into use, we could say. Like I'm just gonna go through the basic understanding as what I see in a company, and like before I kind of not apply, I mean buy a stock. I mean, in that company, I just really try to do those kind of researching, but I didn't. It's not in depth, I would say. Just kind of give you a good overview as how I apply, how I see, how can I determine it's a good investment, all this kind of stuff. Go through those details with you guys. So I'm just going to continue this year. This video is going to be going to use again Blizzard. I know I've been famously using it for a while, but I said why not just take them and kind of use them as a kind of baseline as why. Also, it's kind of give you back ideas why I decided to invest also recently, so that can help you guys. So I pretty much start up with Questra. I love this is the evaluation place. It's really awesome because it gives you like the current PE ratio, comparing it to the industry average, and compared to the S&P 500. So I pretty much do that to all the companies. I kind of go, okay, the P ratio, I would say, okay, like I would say, hey, okay, you know what, 20, that's like compared to the average like 37, so it's very reasonable low, and compared to the S&P 500, it's kind of a benefit. So I kind of do that. I do the same thing for, I would say, price to book, kind of give you idea also, and also afterwards I kind of go into the future earning, what you call the 4 PE. It's relatively like I kind of compare also the S&P 500, kind of get an idea. Then after I also like to see the history of the past, right? To know, okay, back in '09 how much it was, and now, so that kind of you guys can, I like to see, okay, 20 is kind of it's lowest at hit because it is like 18 before and 10, but averagely it has been between 18 17, so 20 is kind of a good, I would say it's pretty much like in a low entry point for that, or a good entry point. I would kind of evaluate like that, or to see its history, and kind of help me to that. Then I kind of always another key thing I've always do is the financials, to see how the financial company, how is it doing financially, right? Because like you can see those PEs are first thing that gives me, hey, it's low, but I mean, is it really worth investing? Because sometimes it could be really a company is going bad, right? So you guys can see here, I kind of see the revenue pretty much almost doubled, I would say, not double, but went up pretty significantly from like 2014 to now. So 4 years, I would say 5 years from 5 years. So it's pretty good also. I like to see operating income went up also. Then I kind of go into the diluting per shares. It went up also. That's pretty good. Almost, it's like pretty much doubled over there, earnings per share. So I can see the net income that has doubled. That means they really became cost cautious, and the operating margin has become higher, and all this kind of stuff. So it kind of helps you know. And also I can also go in the balance sheet. The balance sheet, another important thing is the company can sustain itself, right, financially. So you can go into I go and see what you call, okay, like, the asset has been from 6.9, now it is current assets have been lower. Oh, okay, interesting. I mean, maybe they got rid of certain stuff, you can see. Cash is the one that it's pretty much it has dropped. Maybe that, yeah, that thing that could explain. So I kind of compare, right? I compare to the cash, what's standing, what is the total current assets, and total assets here. I kind of compare. Then also another thing is the debt for me is important also. Total liabilities, total liabilities, it's kind of went down, pretty awesome. That means they're paying off debt. You can see here it's from 4.3 to like, to 2.6 billion, right? So the kind of that also went down a lot. So it's they're paying off debt. That tells me a lot. So I kind of compare all this kind of stuff. I go through the balance sheet, so I get an idea, and also like lead the analysis that's provided by on Questrade. You can see here, so I kind of read, okay, the thesis of what's the evaluation, what are the risks, kind of go through that also to help understand better the company. And also this is kind of a stuff that they provide information. It's good to know, it's basic knowledge. It's good to know. And what else I would do is also see the gross margin pretty much going up also during the years. That's also useful to know. That means they're becoming more. Also good signs, right? All good signs. The company is more what can they say? The return, and they know how they investing, so you can get money faster back. So you kind of go through that. What else? I do that. And you can also see the performance. It's important. It's not that important, I would say, but it's good to know because you can see the total return. It's provided, so example of it. So it's also good to know. I would say, so pretty much to recap, like I said, I go in the valuation. The valuation I kind of see compared to how is it compared to the market and its industry. And also you have these industry peers. You can also click on them and get more details on them. So I tend to see that also, go in the industry peers, see them. So, and also the financials, pretty much it's always the balance sheet. The revenue has been increasing, awesome. Net income has been increasing. So those kind of stuff I kind of always go through it. So the key things I do. Then comes is if I'm kind of satisfied, I like what I see, what is the future growth, right? What's the growth kind of expecting out of them? So I kind of listen to examples if it's possible. I read the transcript, conference calls, listen to them if they give it available, right? So you can listen and view them. And also I would go into reading the annual report, going through the brief ideas, what's in the annual report, get those kind of details, and if I still like them, and to kind of see also like what's the growth, right? I mean, a company could be financially stable, awesome, but they have no growth, or they have no any stuff they're planning for the future. That kind of brings me in the guard. I saying, okay, then it's kind of less interesting, right? Going in the future. So yeah, I would say those are the key things to do. So recap, I check the financials, which is very vital. The ratios, comparing it to industry, to its also the market, how it is done in the past, see okay, where's a good entry point or not, and finish it all off is if I still like all that, I go more into depth reading, which is on the investor relations page of the company in question. So yeah, that resumes it. So I mean, those are kind of stuff I kind of evaluate a company if I want to buy or not. And yeah, so I mean, that's about it. So this video, if you like the video, hit the thumbs up, subscribe if you guys did not subscribe, and also drop a comment if you want to have anything to say interesting. I would love to hear from you guys, like always. And also in the description, I have 2 links, one for the Facebook and one for the Twitter. Would love to have you guys there also. So yeah, so thank you very much for watching, guys, and have yourself a wonderful day.